Have you ever wondered what would happen if money could move without banks, agreements could execute without lawyers, and transactions could verify themselves without auditors? What if trust didn't come from institutions, but from code? Most people think blockchain and smart contracts are futuristic technologies meant only for crypto enthusiasts. But the truth is, they were created to solve a very real and practical problem. Traditional financial systems rely heavily on intermediaries, paperwork, delays, and human trust, and every layer adds cost, friction, and risk. To see this clearly, imagine something simple. You send money online and instantly see confirmation that it has reached the other person without waiting days or calling a bank. Without realizing it, that single action already reflects the core idea behind blockchain: transparent, verifiable, and irreversible record-keeping. This is the Learning Studio, where we break down accounting and finance by revealing the systems quietly reshaping the world. What's really happening in that moment is straightforward. Instead of one central authority maintaining records, information is shared across a network where everyone can verify the truth independently. Once data is recorded, it cannot be altered without consensus. That tamper-proof, transparent ledger is exactly what blockchain is when explained formally: a decentralized accounting system powered by cryptography. The same logic now operates at a much larger scale in finance. Cross-border payments settle faster. Digital identities are verified securely. Trade finance paperwork is automated. Assets like real estate, stocks, and commodities are represented digitally and traded globally. Cryptocurrencies and central bank digital currencies run on blockchain infrastructure, turning money itself into programmable code. Built on top of blockchain are smart contracts, agreements that execute automatically when conditions are met. No manual approval, no delays. If goods are delivered, payment is released. If conditions change, terms update instantly. These contracts don't rely on trust in people. They rely on logic embedded in software. That's why blockchain doesn't just store transactions, it enforces them. This transformation didn't come from traditional finance institutions. It was formally introduced in 2008 by Satoshi Nakamoto, who demonstrated how trust could be replaced by mathematics and distributed systems. That idea later expanded through platforms like Ethereum, which made smart contracts programmable and opened the door to decentralized financial systems, automated auditing, and real-time verification. For accountants and auditors, this changes everything. Records become real-time. Reconciliation becomes unnecessary. Audit trails are permanent and transparent. The role shifts from recording history to validating systems. Finance moves from trust institutions to trust code. Of course, blockchain isn't without challenges. Regulation, energy use, cybersecurity, and adoption remain real concerns. That's why the future belongs to finance professionals who understand both technology and governance, those who can balance innovation with responsibility. Once you understand this intuition, blockchain stops feeling mysterious. It becomes clear why it's described as trust transformed into code. Now that you understand the intuition behind blockchain and smart contracts in finance, the next natural step is to explore decentralized finance and token economies, where banking, lending, and investing operate without traditional institutions at all. Stay curious, stay future ready, and continue the journey with the Learning Studio. I'll see you in the next episode.